Hello and welcome. You're watching Money 9. I'm Sakshi Batra. Well, financial inclusion goes beyond banking the unbanked, which means providing every citizen the knowledge and the tools that will help them save, invest, and grow their money to live their life goals. On Kaise Bachaye, Kaise Badhaye, we catch up with entrepreneurs in the fintech space who are doing just that, helping you save and to grow your money. On the show today, I will be interacting with a renowned financial advisor, Mrin Agarwal, who is also the founder of Finsafe India, which is a financial education startup, and it is aiming to transform financial lives through education. Thank you very much, Mrin, for joining in. It's a pleasure to have you with us on Kaise Bachaye, Kaise Badhaye. Mrin, there has been a lot of talk about the importance of financial inclusion to address the persistent social and economic inequalities in our society. Now, what often gets on the back burner here is a serious thought and implementation of financial literacy that is giving people the knowledge and the skills and also tools to make the best of the financial decisions to help them achieve their goals. And that's something that you're also doing from Finsafe, which is your platform. So tell us the whole idea behind launching this platform about 7 years ago. How has your journey been so far, and how is it really making a difference?
Well, it's been a very interesting journey. Through my working life as a financial advisor, what I saw is that most people find managing money very tough. As we all know, access to financial advice is not really present in India for many. For various reasons, people don't want to pay for it. There are very few financial planners and advisors in India, giving our population size in any case. And hence, what happens is that most people end up investing in a very ad hoc manner. Financial planning is not common, although a lot of people feel that they're doing financial planning, but they actually are only doing investment planning. So the idea was to have a platform that would educate you and would empower you by educating you to take the right informed decisions. So that is what Finsafe is all about. It's an educational platform. We do not manage anybody's money, so we do not give out investment advice, but we do teach you what you can do best so that you can lead a better financial life.
So that's a very interesting point. Also, help clarify more for our viewers out there the difference between, just like what you said, financial planning and investment planning, so that they can have a clear understanding. And also, I'd like to ask you, now that there is a huge gap in the area that you're working on, we know that neither financial education is taught in schools or in college. And then we have these professionals who are struggling to handle their finances when they begin earning. So what really is needed according to you to address this gap?
The answer to question number one is that financial planning takes into account all your financial goals. It takes into account your entire financial situation and you make a plan accordingly. Investment planning is only investing for a particular goal in mind.
Okay.
Yes, financial literacy is not given at school, college, and even at home. Talking about money is a very taboo subject. Most parents do not want to get children involved in financial matters. And I think what is really required is for this to become part of school and college curriculum. Of course, a lot of companies have started including this as part of their induction program, and we are happy to be partnering with many such companies who are actually doing this. But I think what it really requires is at every life stage, it is given importance, just like how we give importance to our physical health.
Could you also help us understand demographically who are your key users? What are the maximum of them really looking for in terms of financial planning?
Finsafe basically works with corporates on financial well-being of their employees. We also run various financial literacy programs at colleges, and this we're doing as part of giving back to society. Plus, we have e-learning courses that anybody can sign up for. And we have two courses, one on basics and the other one is actually a financial planning course. It has a financial planning calculator in it as well. So again, when we look at corporate employees, most people want to know more about planning for financial goals like retirement and children's education.
Yeah.
Most people are still investing. So we do a survey actually with every company that we work with. And what we found is that people are still investing in traditional investments like fixed deposits and insurance, and
That's
really not looking at newer investments, except the younger generation who's looking at trying out almost everything that's available. So I think, people really want to know how to structure their financial lives better. That's what's really coming out.
okay. Now, could you also list for us some of the biggest mistakes that you've come across in your dealings with these corporates and also people who you advise? Of course, you have a vast career of advising, financial planning to investors, potential investors, and people. So, what are some of these biggest mistakes that they commit when it comes to financial planning?
Well, the first would be chasing trends. And I think that's there across the board, whether you look at any age, people are just chasing trends. So right now, Gen Z is behind cryptocurrency.
Cryptocurrencies.
Yeah, the older generation is still in looking at investing at international ETFs and stuff like that. So I think it's a lot of trend chasing at this point in time, and I'm sorry, it's a lot of trend chasing that I have seen throughout. The second thing is that people don't focus on the actual post-tax return in their portfolio. So everybody looks only at the gross return. So if an NCD is giving me 9%, I'll invest in it, but I don't take into account what is the risk in my portfolio, what is the cost of doing this investment, and how is it going to affect my taxes, right? So these are certain numbers that I find people don't look at in the portfolio. They simply go by saying, okay, 9% return, fixed return, let me just go and put my money into it. So evaluation of risk and post-tax returns is really not there. And finally, people do not plan as per financial goals. So I have seen a lot of people investing into equities for a 2 to 3 year period, which is too short term given the volatility that exists in equities. So again, not investing as per financial goals, to my mind, is actually the biggest investment mistake that people are doing right now. And the fourth one that I would like to mention is going after these high risk, high return products. So I think stock market trading or cryptocurrencies, I get innumerable questions on these. Like, what are the best stocks to buy? What should I do? Should I enter Bitcoin, Dogecoin, Ethereum? Which one should I get into? So I think, and the point is that people are doing this without having basics in place. So if you have your basics in place, you're investing for retirement and your other financial goals, it's okay. But the point is that people are doing this without having basics in place.
Absolutely. And lastly, for all those beginners watching you today on this show, what would your advice be to kick-starting their investment and financial planning journey? What would be your suggestions, especially because, most of us come from a thought process of that perhaps saving is just enough. I have money in my bank account. I can see that money is there and I have it completely under control, and that's what I need.
Well, I would say firstly, be an informed investor. Before you actually jump into investing, educate yourself on financial matters. Don't go by what your friends are doing or what your boss is showing off about or what your family is telling you. Because typically what happens is that the older generation is going to be more conservative and get you into investments like traditional insurance and stuff like that. So firstly, educate yourself, read up, or take one of our courses to actually figure out what works and what doesn't work. Second is learn to take some amount of risk, because what I find is that people tend not to take any risk with their money, but they take risk with everything else in their life. So learn to live with some risk with your money as well. You will learn by losing money, so don't be afraid to lose money. Because you learn from your mistakes. And finally, always follow goal planning, invest as per your financial goals.
Okay, well, thank you so much, Mrin, for sharing these wonderful thoughts with all our viewers. I'm sure all of them have taken a note of how to really begin their financial planning journey. Why is it important for them to do so, and what are the ways, and what are the correct ways of doing that as well? Thank you so much. It's been a pleasure speaking to you, as is always, and thank you very much for taking our time for Money Nine. Kaise bachaye, kaise padhaye. And with that, we wrap up this edition for you on Kaise Bachaye, Kaise Padhaye. A whole lot of action is awaited right on the other side, so don't go anywhere and stay tuned onto money9.com.